tax seminar, and we have Sky with us. Now, we are going to wait a few minutes to give a couple people to jump on. I would say we're going to start around 6:37, and then I'll have Sky introduce himself, and we'll jump into it. So, yay! And of course, just a couple of housekeeping rules. If you have any questions, put it into the chat or anything to that extent. And also, he will have all his information at the end where you guys can contact him if you want to use his services. So, yes. So let me see. This is my first time doing a webinar and a live at the same time. So I hope all goes well. So let me see if we can even see people. Let's see. Well, we're 1 minute in, so I'll give it some time. And let's see. I think I'm done. Okay, cool. I guess we can chit chat until we start. So how has your day been? Has it been busy?
Yeah, so it has been very busy, actually this whole week. So I've had big agent meetings with my team. Tarrant County was on Tuesday, and then on Wednesday I had a meeting in Kaufman County. So I drove an hour and a half out there, and their director of their appraisal department, their residential and their commercial appraisal department used to be my manager when I was at Collin County Appraisal District. So I knew her, and it's kind of strange because this year we have three new property tax consultants on my team that came
Okay.
straight from Collin County.
Oh, wow.
So yeah,
So they were appraisers and
they
now
were
they're,
appraisers, correct. They were two of them were commercial appraisers, and one was a residential appraiser. But even like the commercial, the cool thing about it is even the commercial appraisers before they did commercial, they did residential, they did land, they were a land appraiser, BPP, which is business personal property. So they're bringing all of this knowledge from all the different like sectors, if you will, of the appraisal district. So it's great. We're super excited to have them on our team. It's going to make our team so strong.
yeah, you're going to have lots of diversity.
Yeah, exactly. We're covered on pretty much all fronts. And today was my meeting at Collin County. So I used to work there for 7 years, and I went back and talked with our resident, or the resident. I say our because I was so used to working there, but our residential director, and we had a meeting there, and it was great, very productive meeting. So I'm very happy the way it's shaping up.
Sorry, someone just texted me. One of my clients just texted me that they need the link. It should have come email. I'm starting to think this Riverside might be a little bit more challenging than I thought. Give me one
Maybe.
second
No,
so
you're
I
fine.
can,
Take your time.
and it was in an email. So I'm hoping people got the link because
I didn't actually get it like an hour ago, but when you just sent it, I got that one at 6:26. I didn't see one from an hour ago though. I'm gonna grab
email.
a water real quick.
Okay, sounds good. Well, I'm hoping I'm doing this thing right. If not, hey, at least it'll be recorded. Okay. I don't think Eventbrite sent this link. Well, I just sent it to two people. Oh my goodness. Okay, bear with me.
You're fine. Take
You
your
know,
time.
technology is our friend. But is it some days?
Until it hates us.
Until it hates us.
And
And
then
I'm
it will
like,
shut
wait,
down your life.
yes, because then it's like you're so dependent on it. And I feel like, honestly, that's what technology wants. It wants us to be dependent on it. And then now we're dependent on it. And
And it just wants to
we don't
drop the
know how.
floor right underneath you.
Correct. Oh gosh. Okay. Well, I sent it to a couple more people and I just looked to see if it was emailed out and it was. It was emailed out 10 minutes ago and 2 hours ago and yesterday. So that is bizarre.
But someone said that they didn't get the link.
Yeah, I had two past clients, well, one current client and one past client say, "Hey, I never received the link." Oh no, it's right here. Okay, I'm making sure that my back end is still good to go. Okay. Well, we got 1 minute. I don't know if it doesn't look like anybody's on as of right now, but they
That's
just
okay.
got the link, so they'll jump on.
No problem. We
But
can just give it a
regardless,
little time.
I still want us to, yeah, I want us to still start. Um,
Okay.
because I want to be mindful of your time because I know you're busy, just like me. Like we had our awards today, so I got some awards. I was very grateful for it. I'm like,
Oh,
I want to
nice.
keep bringing people value, so that's why I like reached out to Own Well, so that my clients and potential clients
I love how you
can
say it
keep their
now.
house.
You're like, own well, like you stress it.
Yes, I
That's
love
so
it,
cute.
man. It is. Well, when you said it, it was like, holy smokes, that's what
Yeah.
it's named.
The aha moment.
So
I know.
yeah,
So
so
even if I go and do the presentation, will it be recorded? Will they be able to look at it later and all of that?
yes, it'll be recorded on my YouTube channel. So I'll send you the link and then I'll send it out to my database of like 2,500 people. So regardless if someone's on, I do have a couple questions that I had a client yesterday reach out to me about property tax. So we'll answer that as well. So
Okay.
let's get started. Sky,
All
first off,
right.
thanks. Yeah, thanks for doing this. I appreciate you for like sharing your value. And I trust that people will walk away and be like, holy smokes. And it might feel like, some of them might be going over people's head or it could feel like they're drinking from a water hose, but that's why they need to do a consultation or a call with you so that you can walk them through more in depth for their situation. So tell people where they can find you, your social medias, online, all the things, and then your history, and then we'll get started.
All right, sounds good. Thank you so much, Kira. So my name is Sky
Absolutely.
Potter. I'm the property tax manager for Ownwell. I've been at Ownwell since April of 2023, so not too long. Just going on my third year there. Before that, I was at the Collin County Appraisal District as a residential appraiser, and I obtained my RPA there. Over the first 5 years you're at the county, if you're an appraiser there, you do a lot of schooling and you take a lot of courses and tests. And the RPA is a pretty coveted license, and so that I started in 2015 at Collin County, and I stayed there until the end of 22 and transitioned over to Ownwell. And it's funny because it's doing a lot of the same stuff, but it's just representing the people now instead of representing the county. So it's I've been doing it in such a long time now. Um, Ownwell.com is our website. As far as social media, I don't really have a dedicated page right now for you know for Ownwell. They have some. If you just search Ownwell on like on TikTok or Instagram, I think Instagram is where their most of their social media content is. So
Yes.
search them on Instagram, and you can find a lot of key information there. That's what I would recommend. But like
You
the whole
better get on
purpose,
social media, man.
I
You
know
better
I'm
get on
falling
social
behind.
media. Yeah.
Yeah, I'm falling a little bit behind. The marketing team is kind of trying to slap me into to gear now, so I'll get it moving. Just a lot of moving parts on my side right now, but the whole purpose of this is really, just to give your clients and everyone who tunes in just a really good understanding about the property tax process, what they can look forward to whenever they're going in and doing their own appeals. So whether they use Ownwell, they have another agent, or they protest themselves, I just want to give them the tools that they need to best help them to reduce their property taxes. So
Amen. Amen. We love that. Well,
yep,
I'm sure people are kind of like, all right, well, let's get started. Let's talk about
let's
what
do it.
what breaks down, property taxes and all the things. So you have
Okay,
the
well,
floor.
I'll go ahead and jump into my slide deck here. Hopefully, it's not too boring. I'll kind of get through it. I'll start on a pretty basic level because I'm not sure everyone's their knowledge base about property taxes and the homestead exemption and how to file their protest and what kind of evidence to bring and what the ARB process looks like. So I'll go through that stuff at a pretty basic level, and then we'll kind of build up and work up and listen. At the end, we'll listen to an actual protest hearing that I did with Ownwell representing one of our clients.
Love it.
Okay, so appraisal to appeal. The first thing to talk about is what is property taxes. Property tax is an ad valorem tax, meaning according to value. So the property taxes are revenue that's generated that's used to support your local government entities. So the government entities that we pay taxes to when we pay our property taxes are going to be the community college, the city, the county, and the ISD, like your local ISD. Sometimes there's other special entities like the hospitals in some cases, um, and some other various entities that you might pay into. But those four that I mentioned first were the ones that you'll typically pay towards when you're paying your property taxes. The property tax code describes methods by which property may be appraised for property tax purposes. So we will kind of get into that. But starting with this, the appraisal district determines the value of all the taxable property within their county. Um, this second bullet point right here says the appraisal districts are required to reappraise all property in its jurisdiction at least once every 3 years. So right now, currently, like we'll use the Collin County Appraisal District because it's a pretty good district that gives you a really good idea of how everything kind of operates in the majority of the counties in Texas. It's kind of a really good baseline, and examples to use can come out of Collin County. So they have roughly, in their residential department, they have roughly 29 appraisers currently. And I just had a meeting with them today, so that number is pretty accurate. Each of their appraisers will have anywhere from 14 to about 17,000 properties that they appraise, and they have to drive them once every 3 years. And when I say drive them, I mean they have to do a drive-by appraisal. So the things that they are really looking for when they're doing their drive-by appraisal is they're looking from any of the exterior features that they can see. They're not looking on they can't go on the inside of your house unless you've requested them to come and look at a certain issue that you're facing. But they will look at things like the windows, the roof, the AC, the hardscape from the outside, the paint, the siding, things like that. All of those things in perspective to what the actual neighborhood looks like. So if you're like in an old neighborhood, let's call it like say in Plano, um, where the homes were built right in the 70s or 80s, and you know what the typical home looks like in that area. It might, have a pretty old roof, an older AC, just the original, maybe even the original windows still. Now, if there's a property that has like new windows, the appraisers can see that. If there's a new roof, they can tell. If there's new siding or new paint or a new front door, they can tell. And typically, whenever you have a combination of those items that they have done to improve the economic life of their property from the outside, a lot of times they may have done things on the inside. But just based on those features from the outside, they can improve what's called the effective age and raise the market value of that property. Okay? So, the appraisal districts, they use mass appraisal in determining the proposed values each year. So a lot of you may be familiar with a fee appraisal. A fee appraisal is pretty similar, but a fee appraisal is keyed in on one specific property. So they're looking at that one property. They'll go on the inside of the property a lot of times, not always, but they'll go on the inside. They'll take pictures of the various rooms, and then they will look at the market data and see other sales that have occurred around them to ultimately determine what they feel is their opinion of value or what that property is worth. The appraisal districts use a mass appraisal system, so they're valuing the property based on a universe of properties or an entire neighborhood. So the way that they do that is by going out, driving those properties. They enter in all that information that they said, okay, well, this property had this, that, and the other. We're going to increase their effective age, increase that, the effective age, which increases the market value. And then they look at the sales that occurred as well. And from those sales, they can apply a universal modifier or a multiplier to the entire neighborhood. So they enter all of the data that they get from the field. They look at the sales and see the increase in that particular neighborhood, and they apply that increase to the entire universe of properties, and that's the mass appraisal that they do. So a lot of times in the mass appraisal, they don't always get it right. The districts do not always get it right. In the mass appraisal, it's a kind of rule of thumb where about a third of the properties are going to be underappraised, a third of the properties are going to be overappraised, and about a third of the properties are going to be spot on. So you can always kind of take that as a rule of thumb, but it is always a good idea to protest, I think, to protest your property every year, at least to get that understanding of what it's like until you really know what's going on with that value and you feel comfortable that, maybe I don't need to protest this year because I know what my taxable value is versus my market value. We will get into that. That's going to be a very, a little bit more detailed conversation. We'll get into that as we go. And let's go to the.
And what I've noticed too, Sky, is that a lot of my clients who buy new construction properties in the first appraisal is just on the land, and then the next year it jumps up. So what would you advise them to do? But I'm guessing you'll get to that before, or am I jumping ahead?
Yeah, a little bit, but
Okay, then I'll wait.
no, you're fine. We'll cover that because I know that does happen. The first year when it's basically just appraised on the land, and then the next year it jumps up significantly. You really have to watch out for that because that's when people get that shock of well, why did my taxes increase so much right after I moved in? Because yes, the taxes were based on that land value only, and then the next year it's based at full market value because now the house is complete and it's at 100% of market value. So now it's based on the improvement value, which is the home, plus the land, and that's where they're getting their taxes from. So they can see and they should expect a very significant increase if they're buying a new construction home.
Yep, and that's exactly what has happened. And I'll kind of give an example at the end whenever you're done with everything to see
And
what I can.
Just to piggyback off of that idea, now that you've brought that up, one thing that I want to mention is if it is a new construction property, the appraisal date is January 1st. So whatever level completion that property is on January 1st of the tax year, so for this year it would be January 1st, 2025, whatever stage that property is complete, that's all that you're supposed to be taxed on. Now, the county appraisers will go out and drive those new construction neighborhoods, and they have a takedown sheet And I don't remember the exact percentages off the top of my head, but it's like 5% is just whenever there's the rough plumbing is up, where you could see the pipes kind of sticking out. And then it's like 10% once they lay the foundation. And then it's like 20% when they have the
Framing.
framing up. And then it goes up as they start to add the walls and the doors, and then start doing things on the interior, and then the windows and the roofs. And then finally at the end, all they will have left is to do is the landscaping, and and then it's even at that point it's like 90 to 95%, and that's all they will tax you on. And so they have to drive those properties about a week before, the about 2 weeks before January 1st or 2 weeks after, and to determine that level of completion.
Okay, so what I was talking about is my clients purchased their house in 2024. It was complete when they purchased it, of course.
Okay.
And so when now they are coming upon getting their uh, their property
Notice.
taxes,
Hmm.
yep, their notice, they have, like, I have one that I was going to show, but since we're on this, like the first year 2024, they have it as like improvement market value is 68, and then it talks about land value is 70. So then it comes out to like 138,000. Okay.
Hmm.
And then 2025, because the house is completed, they bought in August. So now 2025, they're looking at 553, which I'd have to go back to see how much they paid. And I believe that their lender put a buffer in. But my question is, can they, if it's higher than what they purchased, are they able to go in and say, hey, I'm only willing to pay property taxes on this because this is what I purchased it for? Or can they say that this is more than 10%? Because usually the rule of thumb is you can't go over 10% every year.
Right. And so that's a good question. It's a little bit of a loaded question, but the best way to answer it is this. If they purchase their property in 2024 and they paid less than what the appraisal district says their property is worth in 2025, then they need to protest and give them their closing disclosure
Okay.
and show them their closing disclosure. So like if the appraisal district has them at 550 right now for 2025, but they actually purchased it, we'll just call it 500,000, then they need to protest. And then if you protest online, you can upload your documents and just upload your documents to it, your closing documents. They'll review it and they'll say, as long as they feel that it was an arm's length transaction, that there wasn't any kind of funny business going on, it wasn't like selling it from like my brother to my sister, things like that. As long as it was an arm's length transaction, it should they should get that value.
Okay. And someone just put in the chat too, is an appraisal process done annually or biannually? And I put annually, but I said we're going to ask you because I want to make sure I'm
It's
correct.
annually. It's for
Okay,
sure.
good.
It's annually. So,
Yeah.
and that's a great question. And each year stands on its own. So, what does that mean? It means that just because one year your property value is at 500,000, and you go and protest and you get it, let's say, lowered to 450,000. Don't think that just because you did that the next year it's not going to go back up. It will go back up to the full market value of what the properties are currently selling for at that time, and you need to protest it again if you feel your value should be lower. Each year is independent of one another and it stands on its own.
That's a really good point because each year, yeah, you might have to protest every year, but hopefully not.
Right.
But it is something that you need to pay attention to because sometimes property taxes can make people not be able to afford their house anymore. And so don't let this thing just pass you by in the mail. Like, take
Right.
action if it needs action.
Exactly. In a few minutes, I'll go over a bunch of the stuff for like how to file your homestead if you haven't done that, because that's the single most important thing you can do to protect yourself and your taxable value, if you will, is by filling out your homestead application. And there's also they will the homestead. A lot of people don't know this, but the homestead application, the homestead exemption, is retroactive up to 2 years. Okay. So if you were like, let's say I moved in my house in 2023, but I never filled out my homestead exemption. Well, if you fill it out properly, then you can fill it out right now, check mark a certain box, and then say I'm late filing for what years, for 2023 and 2024. And that will open up a supplement where they will have to go back, apply the homestead to 2023 value, and then they will in turn set up a refund, send that over to the tax assessor collector office. They will process it and mail you a refund for those years because you overpaid your taxes.
That is so good. I'm going to send that to one of my clients because I kid you not, Des, that's what his name. He called me and was like, "Hey, my basically my property taxes went up more than 10%, but they're not allowing me to really protest it because I don't have my homestead." And he had just bought the house. So he didn't really, well, he had bought the house the year before. And so he didn't have it on there as in like filling out the
Yes.
documents and stuff.
Does he not
So
know about it?
he does know about it. I tell all my clients, I
Okay.
even reach out to them and be like,
Okay,
"Yeah, I
but
need to walk
Kira,
you through."
there is a very, very specific way to fill that out. Even a lot of people in the appraisal district, like the appraisers, don't know. They don't know how to
Okay.
do it, okay? And I'm going to show you today. I'm going to show you, I have the form, I have it pulled up, and I will show you exactly how to do that so you can let them know, and you'll have this hopefully recorded. You can revert back to it at any time. Let me get
Okay.
through a couple of these. This is
Sorry.
pretty simple
Yes.
stuff. No, you're good. Three approaches to value. So cost approach, income approach, and the market data or the sales comparison approach. These are the approaches to value that the appraisal district will use. The cost approach and the income approach primarily are going to be used for commercial real estate. The cost approach will be used for property types like industrial warehouses or manufacturing plants. Income approach will be used for retail, for multifamily, for office condos and things of that nature. Anything that's going to be bringing in some sort of income from the rent. The market sales comparison approach. Basically this is like the appraisal district of like when a realtor does their CMA. They do like a comparative market analysis and they look at the comps. This is basically what the appraisal district does. They pull comps and they compare your property to other properties that are most similar to yours. A lot of times it's in your neighborhood unless nothing's sold in your neighborhood. And then that's how they will determine what they believe your value is worth. Okay, and let's go on. All right, again, this is one of the most important things right now, and I want to stress this. And this first bullet point right here is super important, and I'm going to tell you why. The property tax code says that all property must be appraised at its market value as of January 1st. Okay, why is that important? Because if you are to protest and you go into the appraisal district and you say, I have flooring damage. I had a flood, and I have flooring damage, and I also have windows that are broken. And they're going to say, okay, well, where are your estimates? Do you have any photos? And if you go, yes, I do. Here are my photos, and here are my estimates. I have estimates from October of 2024, and nothing has been complete. It's still in the same condition right now as it was then. They will have to consider that evidence. They will have to consider that evidence because it's still in that condition as of January 1st. But if you go in there and you have an invoice and you say, my flooring was damaged from a flood and I had it repaired in November of 24, well, they're going to say this. Well, if you had it fixed in November of 24, on January 1st, it was actually in great condition. So you're not going to get any relief because on January 1, which is the appraisal date, you had already repaired your floor. Now, if you come in with a roof estimate of for $10,000 in February of 2025 and say, yeah, this is my roof estimate. It's for $10,000, and you know that's that's what I have to present as my evidence. They're going to ask you some follow-up questions. They're going to say, what caused the damage? You might say a hailstorm, and they will say, when was the hailstorm? Okay, very key question. If the hailstorm was, let's say it was a couple days ago, it was, let's say it was January 25th. The hailstorm was in January 25th, 2025. Well, we can't consider that evidence because that happened after January 1st. But if that hailstorm happened in December 29th, they will consider it because it's before January 1st. So it caused damage before January 1st, which is the appraisal date. That's why that date is very, very key. Okay? Lots of different situations can happen around that date, and it's very crucial to understand that because when you're presenting evidence, if your evidence that you present has not been repaired on January 1st and it's still suffering those conditional issues, then it should be considered. If you've repaired any of that stuff before January 1st, then it's likely that it will not be considered. Okay?
That is so good too, because as a realtor, when we are doing our comps, we are only supposed to do comps from January 1st and back, like the last, I guess, yeah.
Yeah,
Instead of,
so that's a good question and that's a good point. But let me tell you the date that okay, the Collin now some counties will use different dates. Collin County goes back from January 31st of the previous year through February 1st of the current year.
okay.
So it's basically like from January through the end of January of the current year. Because after January, like of this year, what they're doing right now is they're doing their analysis phase where they're looking at all the neighborhoods, they're trying to apply those multipliers that we talked about, seeing what increased, and they're getting their notices ready to be sent out to homeowners on April 15th.
Yeah. I mean, some
That's
people have already gotten them. So, yeah, but my question is like, as a realtor, when I usually send out comps,
yep.
I usually send them out for the March, like when they reach out to me. But what you're saying is that we really should be doing it between last year, January 31st, all the way until this year of February.
Right.
Correct?
Correct.
Got it.
Correct. Correct.
See, I'm even learning something here,
Yes.
because I've
Yes.
been, sometimes when I send comps to people, I'm saying like, oh, I think that they have those numbers wrong because I'm sending them like what has been going on like in March, because usually they
Mm-hmm.
reach out to me in April. So that's good to know.
Right. And another thing, just to key in on that, when you send those comps, a lot of the times, if they take them in, the appraisal district will try to pick out the comps that are closest to January 1st because they're saying we're trying to establish the market value as of January 1. So they try to put a little bit more emphasis on properties that sold like in the last quarter or in the first quarter of 2025. Okay. So
That's
that's
good.
kind of one of the things that they do. But if there's not a lot of sales to pull from in the last quarter, then that's when they start to kind of go back to,
December,
the middle,
November.
yeah, or June or
Okay.
April or whatever.
Okay.
So I think that we can skip the rest of this slide and okay, this right here, the selection of comparable properties and application of appropriate adjustments in an equity analysis. Real quick, I just want to cover something, and I'll dive into this a little bit more. Whenever you protest your property, you have the option of protesting the market value or equity value, which is also known on the form as unequal. Okay, they're two separate hearings that you have the option of doing. Or you can check mark both boxes and they will hear a market and an unequal hearing. The market looks at three different factors. Okay. It looks at any relevant sales, including your own if you just purchase your property. It looks at the condition of property. So if you have any kind of damages that have gone on or any uh, condition of anything that's around you that may be causing your property to suffer some sort of physical or external um, damage or value that you think that should decrease the value. So it's sales, condition, and location. If you say I back up to a major road, or I back up to these apartments, it's very noisy, or I'm by this school that's right across the street, or there's a Walmart that's being built right behind me, or I'm next to this highway, or there's planes that are flying over my house constantly. I'm right in the flight path of Love Field, or whatever the case may be. All of that stuff is going to be addressed in the market portion of the hearing. The other portion of the hearing is the unequal portion. In that portion, what they're going to be looking at is the market values of any of your neighbors around you. And whatever the district says those properties are worth, they're going to compare those in your immediate neighborhood to you. They may not be sales, they may just be your neighbors around you, but it's typically will come from either your street or streets really close to you. Okay, so the first one, the sales, the market hearing is going to look at sales, the condition, and location. And then the unequal portion of the hearing is going to look at the market values that the district has placed on properties around you that are very similar to yours.
Easy.
Yep.
That makes sense. I mean, being an appraiser for so long for the county, I'm sure you are very like tedious. Like, I mean, the slightest things, I'm sure you had to do adjustments and yeah, fun
It
stuff.
was. Yeah, so we had pictometry that we'd use where the appraisal districts will fly a plane and take their own. It's like Google satellite view, where you could just see everything of all the whole county, and it's very like high definition now. And they would fly it every year, and so we could like zoom in and see like someone's backyard if they have a pool back there and there's not one on the roll. They even have technology where they can pick up and say, well, this didn't have a pool last year, because they can read the land and they can tell that there's actually a pool there now. And so then we'll add it onto the roll and say, well, yeah, here's your $60,000 pool that you built that you don't have any record for. But anyways, yeah, it's there's a lot of technology and stuff that goes into it. But so this right here is something also very important. The appraised value for a residential homestead may not increase more than 10% per year, plus the value of any new improvements. Okay, so this right here says the market value of new improvements may be added and are not subject to the 10% cap. Okay.
Ooh, that's that new construction, I guess.
Well, that's okay. So it's kind of like new construction, but what it is like if a person, let's say they add a pool. Okay.
Hmm.
Okay. So let's say 1 year their property value is worth 300,000. That's what their taxable value is. The next year it can't increase more than 10%, right? So next year it would be 330,000, because that's adding on 10%. But if they added a pool, and let's say that pool value was $30,000, well, now it's going to be at 360. Okay. Or if they added a covered patio, if they added a metal building, if they added a barn, if they added horse stables, if they added a gazebo, if they added
Or a
a
fence.
fence, and that they don't really appraise the fences. There's not like a line item for that, for the fence. The fence would be
That's
covered
good to know.
in, yeah, the fence would be covered in that drive when we're like driving by. And so like if I was to look at a property and the only thing that that property did was they just changed their fence, I'm not going to raise their value. But if the typical the typical property in the neighborhood does not have a new fence, no one in that neighborhood has a new fence except for five people, and those 5 people also did new windows, new roof, and new paint, then I'm going to increase those because those are setting themselves a little bit higher than the typical property in the neighborhood, right? But
Wow. Okay.
if everybody in the neighborhood has a new fence, I'm not gonna raise their value because they
Yeah.
have a new fence. It's all relative to
Yes.
what is in the neighborhood.
So, so I live on an acre, and most people don't have a fence, but people do have a fence, and the fences are not cheap, man.
No,
And I
on
walk,
that, it's
I
different.
walk the neighborhood saying, "How much is your fence? How much is your
Yeah,
fence?" To see
yes,
if I can find someone who's lower. So I'm debating: should I get a fence? But I
exactly.
also don't want to get. I don't want to have to pay more because I got
Right.
a fence.
It's just like in my parents' neighborhood. They live in an old neighborhood in Garland, and they were built in the 70s. And, some people, like, they have a lot of remodels in there for sure. But the house, the fences are just, they're normal fences. But then our neighbor lives on a corner lot, and they have like an electric gate. And it's like, okay, you know, there's like maybe 2 people in the whole neighborhood that they live in that have this nice board on board custom with a electric gate. Now that's a little bit of a, you're up here a little bit. Your value probably would increase in that case. And yes, like you're talking about, if you're on an acre and you have a nice custom fence or like a wrought iron fence that goes
We can only
around.
do wrought iron over here. So
Exactly.
yeah,
We know that that's like, ooh. I mean, as we're driving, we're like, dang, okay. Yeah.
it's I walk in the neighborhood like, holy smoke, they just got a fence. I'm like, I need to be friends with
Yeah.
them because it's like buying another house. I mean, I talked to one guy, he said he paid $26,000. But anyways, um, let's focus on this.
Right.
It just made
No,
me
that's I know what you
think.
mean. I look at houses all the time as I'm driving by, so I'm doing the same thing. And like I just got a new roof put on my house, and I'm like, I got the nicest roof in the neighborhood now.
Hello.
What? Yeah, that's funny. Um, so this is let me see if I can share another screen real quick that might show this a little bit better. Give me 1 second.
And guys, if you guys have any questions, I know that we had one person ask a question. This is a perfect time. Once again, I know that this feels like drinking from a water hose, but it's okay. Whatever you're curious about, he used to be an appraiser. Now he, represents on the better side of things, us. And so ask away because we have him, and he's not charging now. Later on, if you try to get a hold of him, I don't know if his consultations are free or what, but since we have him, we might as well use him to the best of our ability.
Yes, feel free to ask questions. This is free. I love to do this. I've been doing it for such a long time. I just really like passing on the knowledge to people. I do it for actually, I'm in a brokerage as well. I have a real estate license, appraisal license, and a property tax consulting license. So I just like everyone to know the information. And like you were talking about earlier, about your friend who, didn't know about the 2-year retroactive homestead exemption. When I was at the appraisal district, it was around 21 when there was that crazy spike in the last quarter where property values were going up like 30% in a half of a year. And so there was a gentleman who bought a property in, like, let's call it like in 2019, never had his homestead on his property, and it was in Craig Ranch over by the TPC Craig Ranch golf course, and that was the
Mm-hmm.
neighborhood that I was appraising. So they're like they're pretty nice. I mean, they're very nice homes, but his was a at the time it was a grand home, and he purchased it for, we'll call it $850,000, and in 21 it spiked and it went to like 1.2 million. And I was appraising the property and I noticed he did not have a homestead. I picked up the phone as I was working at Collin County, and I called him and I spoke to him. I walked him through how to fill out this homestead exemption that I have on the screen right now, and saved him thousands upon thousands of dollars in his property taxes and over $1,000 in his mortgage note,
Woo
just by
woo!
just
He
by
was
doing
like,
that.
He was like,
Yes.
man, you are
Yes.
forever going to be getting referrals.
Yes. I used to do that something there. I did though. And I felt so good about it because I was like,
Yeah.
man, if this was me, I don't know how I could go on knowing that. It's hard to sleep at night if you have one of those situations happen where you didn't take advantage of doing that and it's too late. That's
Hmm.
a hard thing to
To
that's a
swallow.
hard
That's a
thing to
hard
swallow.
pill. Yeah. And okay, so we got quite a few questions.
Okay,
Do you,
sorry. Please, you keep up. Let me know them. Go ahead and fire them off. Fire them off.
okay, cool. The first one was saying, how do tax breaks work for veterans?
Okay, good question. And I'm just immediately going to jump out and say I am not the expert on the exemptions of like veteran exemptions, disabled veteran exemptions. I know disabled veteran, if it's 100%
You don't have property
disability,
taxes.
you have no property taxes. But what I would say is there's actually I thought that the phone number it's above this. This is kind of cut off here, but let's see. There it is. This number right here is to, well, I don't know. Are they in Collin County or what county? Call
So
their
no,
appraisal district.
so he'll be buying in Tarrant County. I know who
Tarrant
this is.
County.
Yeah, this is Terry. So he plans on buying. You do you still plan on buying in like the Arlington, Fort Worth area, Terry? Or are you deciding to go to another
Well, if it
location?
is Tarrant County, I would say call the appraisal district. Right now is a great time to call because they're not as busy as they're going to be in a couple of weeks when they send out the notices and people start coming in to start doing their protest. So if you call now, call and ask them how does the veteran exemption work, and how can I apply and get that set up. And they're going to be the best ones to answer that. I don't want to give you any false information, but it's definitely something that you need to check out. Now, on this form right here, this is just the general resident homestead exemption form. This is the part over here that I was talking about. If you're doing a late filing, it is retroactive, but you have to check this box right here. Okay? Late filing for prior years, and then you would enter in what the years are 2023 and 2024. What year are you filing for? Right now, it's 2025. That would go here. You would just select general residence homestead.
Sorry, we have a
You
couple more questions
Yeah,
too.
go ahead.
But
No, whenever
but
you're ready.
do you want to finish this and then I
Well,
go to those?
it's pretty. This is pretty self-explanatory on how to fill this out. There's not a whole lot of. You just look at these options here. Select what you think might apply to you. If it's just a general residence homestead, that's here. But there's a lot of other options on here. Just carefully read through it. Down here, it will ask you the date you acquired the property and the date you began occupying the property. Two different things because I could have taken over the deed and purchased a house in November 3rd, but I didn't move in until January 15th. Well, the date that you move in, the date that you start occupying your property is the date that they will apply your homestead on. So keep that in mind as well.
Love it. Are you ready for questions?
Yes, let's go.
Okay, awesome. So we told him to research for the veteran one, and then DJ is asking, are we required to file tax exemptions every year?
No, once you have your exemption, like for
Oh,
your
homestead.
your homestead,
Yeah, you're good to go for
it
1 year.
should be on there. It's you're good to go.
Yeah.
Now they did pass a law where they have to. I believe that they have to do a check once every 5 years. Okay, and so they might send you out a form, but they're not going to start like if you just now put your homestead on. They're not going to immediately send you. They're going to go with the people who've had them on there first and kind of go through that. Since it's a new law, they're going to kind of go back to the people that have had them on there the longest time and get them to reapply and make sure that they're still living there, that they're not occupying another property, because we all know you can only have your homestead on your primary residence, and that's all.
Repeat that again, because sometimes people get a little
You can
confused.
only have your homestead exemption on your primary residence. If I have a rental house in Dallas and a rental house in Denton, but I'm currently living in McKinney, I can only have my house on that property that I'm residing in McKinney. I can't have it on those two, and it's a big no-no. I don't know what would happen if you get caught. but they do checks sometimes with the other appraisal districts, and they will send each other information. They will cross check, and if I don't know what would happen, but I really wouldn't want to find out because I wouldn't want to have to be
Hey,
backlogged and for taxes for 10 years and get
yeah.
slapped with a $15,000 or $30,000 bill. No, thank you.
Yeah, no, thank you. Also, with veterans too, because usually you can have two VA loans at the same time. If you're 100% disability, it only is 100% on the primary. It's not on both. I get that question a lot from my veterans.
See, there you go.
Um,
I'm learning something too. Thank you.
yes, well, I know. I feel like I know all the loopholes. That's why I like. That's why I have to ask particular questions because I'm like, I have people who are like, they skate the line very closely, and I want to make sure
Right.
that we're not trying to get in trouble. So then we have another question saying, can your business file for homestead? And I believe that answer is no, because
That's for
unless that
sure.
business,
It's no.
yeah,
Yeah,
uh,
there's no homestead for commercial property. Um, yeah, there or rental properties. You can't file a homestead on that. So
yeah, because you have to be physically living there. And that's why when I talk about house hacking, it means that if you're single and you don't have family and you want to house hack and you buy a house for and you live in it for 2 years or 12 months and then you go buy another primary home, you rent out the first one. That's what I've done. My condo, that's my investment property now. So now
right,
I'm in this house. This is my homestead. That can no longer be my homestead. And you can get into another property for a little lower. It's almost like 3%, and then you can. Um, Maybe I'm saying this wrong. Um, and then so you would only have homestead on here, so you would only get the break here. You wouldn't get it there. Hopefully,
right.
I didn't confuse
Yeah,
people.
but if you have those kind of those exemption questions, always check with the appraisal district because there's a lot of different things that you can do when it comes to those exemptions, and especially when you're moving and transferring. There is a certain thing called porting your homestead exemption from one county to another, and you have to find out the specifics of that because sometimes it's extremely beneficial because you're porting over the exemptions that you had from your prior property, even though it's not going to be on that anymore, you're porting it over to a new one, and they might be more beneficial when you're doing it that way. So those are the kind of specific things that you would have to find out because I don't even know the answer to those. It gets very convoluted when it comes to things like that, but the most
Yeah,
important
very
thing to do
granular.
is to protect yourself by having at least your general homestead exemption on your property. But let's go to
And then,
this because there's a few.
oh,
Sorry, go ahead.
I was gonna say there was one more question, but
What's that?
I believe you answered it. It said, "How far does the homestead account go back?" And you said that if you wanted to, like, if you miss the previous year, it can only be up to 2 years, correct?
Right,
Or how
right.
come?
It's 2 year. It's 2 years. If
Yes.
there's
And
if
then,
you go ahead.
sorry, go ahead. No, no, go ahead.
No, if there's if you have something like a square footage discrepancy, which happens sometimes, if you find out that they've had your square footage at 2,700 square feet, but your property is really only 2,300, if you submit the documentation for that, then they will go back up to 5 years for square footage discrepancies. But for homestead, it's the current year and going back two.
I hope that answered the questions. If you guys have any other additional questions, please let us know. Go ahead and
Thank you.
proceed, Sky.
All
Yeah.
right, thank you so much. So this is what the notice of protest looks like. This is the protest form. On this, it's pretty simple. You would just fill out your name, basic information, your address, phone number, your appraisal district account number if it's known, which if you get your appraisal notice that's sent, which is this next document I'll go over, you'll have that. This is the one I was talking about, where you can fill out the market and equity. You could check mark that one, and that will cover both of those hearings. Or you could do the market hearing, which is this when they look at the sales, the condition, and the location. And then the equity, this says value is unequal compared with other properties. That's saying that I don't think that I'm being treated fairly amongst my neighbors that are right around me. Then you would do that. I suggest always doing both. You get two bites at the apple. They'll go with the lower of the two It's a win-win situation. You can't lose by checking both. And then they have some other things here, like if your homestead exemption was denied for some reason, property description is incorrect. If there's something on that, you can file for these things. But these are the common ones here, the market and the equity hearing. Just fill this out. I would always recommend when it comes to this kind of government type documentation that you read the fine print on them, because they will have some good things under here. That's where you learn. You learn by reading this stuff down here and reading it thoroughly, reading the information that's before you. Okay, so real quick, I just want to go over this. This is the notice of appraised value. This will it will look like when your notice is sent out around April 15th, and it will be around that time. Now, this is very key. You have 30 days to file your protest from the time that the notice is sent, not the time that it's received. Very big difference. Because if you say, well, I didn't get my notice, they might have sent it out on April 15th, and you say, I didn't get my notice until the 27th of April. I'm supposed to have 30 days after that. No. They are very specific, and they will timestamp it when they send it to you. They know exactly when they send it to you, and you have 30 days from the time that they send it. That's it. No questions. All right, so then this right here, total market value, this was the prior year, 2023, the market value from 2024. Now this is the appraised value. This is taking in consideration homestead exemption, okay? So this right here, if you would look, and I have my calculator right here, and I'm doing 284,350 times 1.1, that's 10%. That's 312,785. That's exactly what it is here, okay? That is the 10%. Now, then what you have is you have your appraised value down here. That's because I have the homestead, and this is my property. This the homestead exemption on it. I just blocked it out so Kira doesn't come and try to knock on my door. Hey Sky, I had some more questions. Can you come out real quick? No.
No worries there. I won't come knocking on your door there.
Yeah, you probably don't want to come all the way out to Princeton anyway.
No.
And so, but here, this right here are the exemption amounts that are allocated from each of the entities. The city of Princeton, they give no exemption amount. Okay, so the taxable value is going to be 312. The Collin County, they give 16,418 off of this 312, so the taxable value is 296. And then the Collin College gives 65,000, and then the school district gives 100,000. So then your taxes are going to be based off the taxable value, because those are the exemption amounts that are taken off. Then you would multiply this by the current tax rate, and that's how you would know exactly what taxes you're paying, okay? And you would get the tax rates from the tax assessor collector office. So there's another website that you would go to if you were like, I want to find exactly. They used to put an estimate on here prior years, but they don't do it anymore because there's just too much. It was just an estimate and people were all up in arms. They took it off. And then things like this right here. Now this is very important. I need to cover this. You have the right to an informal and informal, I'm saying informal hearing as well as a formal hearing, okay? So what you can do is whenever you have your notice sent to you and you're like, I need to file my protest, you go ahead and file your protest, and then you can scan this QR code and schedule an informal in-person hearing. Okay, what that is you don't even have to have this copy with you. You don't have to have your notice. You don't have to have anything. You can schedule this, and then you go into the appraisal district and say, I'd like to speak to an appraiser about my property. And you will actually go back and sit with that appraiser, and you can even, at that time, you can take your phone and show them pictures off of your phone. Just very informal. Like, look, these are all the damages that I have. You can play a video and show them, whatever the case may be. And the whole purpose of that meeting is to try to come to an agreement about the value of your property. Okay? If you do not come to an agreement, that's okay. In that case, you have already filed your protest. You will just proceed when they tell you what your date of the formal protest is, and that's where you will go before the ARB, which is the Appraisal Review Board. They're made up of 3 panel members. They do not work for the county. They're an independent body appointed by a district judge, and they will listen to your evidence, the appraiser's evidence, and then they will deliberate and then give you an opinion of value at that point. Okay? So I know that was a lot of information just kind of piled in, but if I were you, I would always do this informal because, again, it gives you 2 bites at the apple. You might come across a really cool ass appraiser like me when I was at the district, and I'm like, oh, I got you. Yeah, show me. Okay. And I was very fair. So
Yeah.
you might come across that. Whereas if you just go into the formal hearing, you might have some ARB members that barely look at you, listen to you, acknowledge you, and they're like, no, we're not going to do that. We're with the district. We're going with their value. That's fair, and you're done. The hearing's over. So it might be like that. But I'm just letting you know, just go do your informal first. It's much more lax. And you can bring your phone. Whenever you go to the formal hearing, you cannot. You need to bring in, you either have to upload it online before your hearing, or you have to bring in paper copies and they will scan it in. I think you can give them a thumb drive and they can upload it from that. But to be safe, you would print them off and they will scan them in when you're there.
So repeat that again. If you see that your value is over 10% and then you decide, hey, like I don't want to pay over 10%, we know that that's the cap. You go do an informal like protest, and hopefully you get a cool appraisal like Sky, and then he's like, yes, I totally agree with you, you know, they're going to fix it. But if they don't, then you get elevated to or escalated to the next set of
the formal hearing.
The formal hearing. Thank you. I'm like, what are the words I'm looking for?
The formal.
And then you'll have 3
panel members.
Yep. There we go. Thank you. 3
board members. 3 board members. And you know, you sit in this room, and you'll sit in the first chair. Then there will be the appraiser, and then there will be a recorder who records the hearing, and it's also video recorded and it is audio recorded. And I'm going to tell you this is another thing very, very crucial. You probably would never get this information if Kira didn't put this on, because she does such a great job for her clients. But all of that information after you do those hearings is open records. So it's subject to an open record request. You can request a copy of my hearing, their hearing, his hearing, my neighbor's hearing. If you know they did a protest, you can get their property ID and say, I want a copy. Send me a copy of all of the formal evidence that was submitted on this property ID. I want the audio and any of the evidence submitted by the district or the taxpayer. They will send it all to you.
Holy smokes. Now that's good stuff to know.
Yeah. Also, you can do this. Kira, this is good for you to know. If you're like suspecting, like for instance, I before I was looking at a house and I was like, I think this house probably had foundation issues, but they're kind of covering it up. I don't know, but there's something off here. I did an open record request for any of the past hearings that were this property was involved with, and they sent me all of the documents, and I had the foundation certificate in my hand, like I had the warranty, like I had it all because they submitted all of that stuff. I knew exactly what happened, what company. Then I called the company to see if the warranty, the foundation warranty, was transferable.
Yeah.
Right. And I got all the information, and I was like, oh, y'all are covering up quite a bit. I'm just going to move to the next house.
Well, that's odd because they should be disclosing that. I mean, they honestly could be sued, but we won't talk about that.
Yeah.
We're not attorneys here, but we do have another question. Okay. Someone said if we are if we're disabled but not from the military, is there any deductions for that?
Disabled
Hey,
person right here. Let me see. What does it say? Your property may qualify for one of these residence homestead exemptions if not already indicated above. Visit our website or contact our office for more information. Disabled person is on here. Yes.
it sounds like
So
it's
yes, and I can kind of blow this up a little bit and scroll down a bit so you can see right here where I'm talking about. It says you may qualify for one of these residence homestead exemptions if not already indicated above. Visit our home site. And then they also have these. Um,
okay. I
yeah,
see
you
what
may
you're saying.
qualify for one of these residence homestead exemptions, which is disabled person. So
Yeah,
yeah,
so
but
you
for the
could.
specifics, yeah, call in and ask them. Say, this is my situation, and tell them, and they'll let you know how to proceed. Good question though. Sometimes I have to look at that stuff because there's a lot more than what people really know, and I don't know how all of that stuff works. We had a whole exemption department, and I would refer people when they came in for those informal hearings. If they had questions about that, I would finish talking about the value and the stuff that I could cover, and then I would walk them to the front and get them with someone who could let them know all of the information about the exemptions because it's very specific. All right. Well, I know
Awesome.
that we're kind of running behind on time, and I would really like to listen to that hearing. I want people to. Do you think we have time to do it?
Yeah, let's do it. I mean, it's okay. I think we have enough time. It's 7 minutes.
It's
So,
very okay. Let me just preface it and show this document right here. Um, and thank you for everybody for staying on this long and being very attentive and asking questions also. Um, this was a very specific case right here. This is where this property actually sold in the prior year. So this is a hearing that was from 2022. Yeah, in 20. Okay, they purchased it in 22. The hearing happened in 23. So I'm working for Ownwell. I'm representing the property owner who purchased his house in March of 22. And let me go to this closing disclosure because I want you to see, and sorry for scrolling so like this. All right, everybody close your eyes for 1 second because I know it's a lot of information to go through.
yeah.
I'll tell you when I'm there. All right, there. Okay, so the closing disclosure right here. This person purchased their property for $849,292 in March of 2022. Now I'm going to go here to the district's grid. This is the district's sales grid right here. These are their comps in order. This is what the district was appraising them at. This is what their market value. They said their property was worth on January 1st of 23. You guys remember he just purchased it in March of 22. Okay? I was working for Ownwell at the time and I'm representing this homeowner and I'm doing everything that I can to get him his purchase price. But what they're saying is they're saying, look, his property is at 5,010 square feet. Our comp number one is 4,436 square feet. It sold for 1.077 million in December of 22. So that's a strong comp supporting their value. Okay. After they make adjustments down here, their value of this property, after all the adjustments were made, was valued at 1.1. Okay. Their next comp, number two, is a property that was 3,900 square feet, so a lot smaller, over 1,000 square feet smaller, and it sold. This is an MLS verified sale for 1.143. There were seller paid concessions for $10,000 here. The indicated value of the property after adjustments was at 1.25 million. That was their
Yeah.
second comp. Their third comp, it was 3,938 square feet. He has this my client has one of the largest properties, but this one was over 1,000 again, smaller. Sold again. Look at this one in November, right? For 1.062. The indicated value is at 1.182. These are very, very strong comps for the district representing their value, supporting it. Okay. Remember, I still have to fight for him. He just bought it for $849.
Holy smokes. But that shows you the power of real estate. He bought it
$849
for $849 and it's appraising the next year
in
for
March. It was only
1.1.
yes, eight.
That's
He bought it, and
crazy.
these all of these are showing that is all of these are 1,000 square feet smaller
Man,
so
that was a
far.
good buy. That was a good buy, man.
Good.
Okay.
Look at this one. This is another one. 4,000 square feet, sold January of 23 for 900,000. After they do the adjustments, it's at 1.02 million. Now, guys, I really want to show you this real quick before we listen to the audio. I want you to understand what they're doing on these comps. This is very much like a fee appraisal. And so this is the way it goes. Okay, follow me on this. Just pay attention on this real quick and I'll get through it. You'll understand it completely. At the end of this, you could probably do my job. Their market value of the subject property was at 1.154. The market value that the district said for this comp, which was comp number 4, is at 985,639. It sold for 900,000. This row right here is the land value. The land value for the subject property was 275. The comp was at 250. So they are making an adjustment of $25,000 right here. They're adding it. It's a positive to equalize the value. Okay. So what they're doing is they're making adjustments to say, okay, now we can compare apples to apples, because we're going to make a positive adjustment to this property to make it look like the same land value as the subject. Now they go line for line. It's in the same neighborhood, so they don't have to do a neighborhood adjustment. Sometimes if it's in a different neighborhood, you'll see a number here. It's the same class, the same quality of construction property, so they don't have to make an adjustment here. This property over here was built in 2020. The subject was built in a 2021. So they're making a positive adjustment because this property is a little bit older. So they're making a positive 6,500. Now, this is where they get into the square footage, which is the segments and the adjustments for the, all the different characteristics of the property. This MA means main area. So it's a lot smaller. So it's only 2616 on the first floor. First floor of the subject is 3269. So because it's inferior, they're making a positive $53,000 adjustment, 63,000, and so on. AG is attached to garage. It's a 3-car garage. There's 2 on one side and then another one on the other side, 200 square foot garage. There's a covered porch on the front, covered porch on the back. There's another main area on the second floor, which is probably like a media room. I don't know what all these other MAs exactly are, but there's probably another game room upstairs, and that's what this is. Now, these net adjustments right here, this is where this goes. This line right here, the 88,760, is adding up and subtracting all of these. That's the net. It's 88,760. If you were to take this 25,000, and I'm just going to show you, do it on my calculator right now, 25,000 plus the 6,500 plus the 88,760 equals 122.60. That's here, okay? Then what they do is they go, that's a positive number. Sometimes this can be a negative number too, but because it's positive, they add that to the purchase price. So if you take the $900,000 plus the 122.60 in adjustments, you get this right here. Okay? 900, you can see it right there. The 900 plus 122.60 is 1,020,260. That's the indicated values. So all of their 4 comps are very much supporting this value that they're saying that my client is now worth 1.1 million, up over 30% since he purchased his property in March, and I'm in this hearing fighting for him to get his purchase price so that he or she can get their homestead exemption on the $849,000 and pay property taxes on the $849 and their mortgage note on the $849 instead of having it raised up to 1.1 million and paying on that for the rest of the time that they're in that property.
Holy smokes. Yeah.
Okay.
Okay.
Now, let's cue it up, and I'm going to show this real quick. Give me 1 minute on this. This is just a mortgage calculator. If they get it at 849, they had a down payment, whatever, all the 20%, 4.125, their monthly mortgage would be at 4497, and their property taxes would be 10,616. If they were to be at what the district told them at their 1.1, their mortgage would go from that 4,400 to 6,000, and their property taxes would go from 10,000 to 14,000 every year. Okay, so that's it. I'm going to show you that, and then you can go ahead and play it. Try to adjust. Yeah.
I was going to say, will you stop sharing and then it'll allow me to share?
Yes, I will. And then whenever I start speaking, the district is going to speak first. And then after that, I will speak. And when I do, my microphone, the transmission is not very good, so you might have to adjust your volume a little bit. It sounds kind of scratchy, but try to make your way through it.
Okay, so can you guys hear this?
No.
No? You can't hear anything?
No. You have to. Are you sharing? You might have to share the tab instead of the window. Try sharing the tab.
Oh, okay, guys. Bear with me.
Okay, no problem.
Instead of the window, share the tab. Okay. And I don't think I can. I don't know if I can share the. Okay, let's. I know this looks weird. Sorry, friends. Give me 1 second. Can y'all see this? Can y'all hear it now?
Oh, no, can't hear it. No, it's okay. It's okay. I got you.
I know. The one job I had, I have failed you. I apologize.
There we go. We can hear it.
I can't hear anything.
Okay, hold on. Give me 1 second.
Okay. And I can try it again if I just.
Give me 1 second.
Equity. I'm signing electronic affidavit saying I'm not.
I can. Can you guys hear it?
Facts of this protest. Let the record.
Comment yes, no, maybe so.
Number 44397, case year 2023, property ID 2818308.
Yes.
Protester Ownwell. Mr. Potter here by phone today. Owner name is Bora. Status address 13643 Berryfield Lane, Frisco. Notice of market value $1,154,456. This no protest opinion value. This is market and equity. I'm signing electronic affidavit saying I'm not communicating with anyone regarding the facts of this protest.
Alrighty, district does have 4 comparable properties sold in the subject neighborhood, selling from November 22 to January 23. Sales is ranging from $900,000 to $1,133,533. All same quality RV11 properties like the subject. The subject was built in 21. Comparables built within a year of that either way. Subject at 5010 square feet. Comparables ranging from 3938 to 4436 square feet to give an indicated adjusted value range of $1,020,260 to $1,255,165. Subject is clearly on the larger end of the neighborhood. Not many homes of that size. That's why we pulled a little bit farther away. Subject notice falls well within that range of value, so I'm going to remain at the opinion notice at this time of $1,154,456. Moving to equity. 11 equity comparables in the neighborhood, same quality built homes built within a year or two of the subject property, within about a 700 square foot difference, starting to get some more closer in size to the subject, to give a median adjusted equity of $1,135,005 down from notice, and that will be the district's revised opinion of value. The median equity $1,135,005. Nothing further.
Mr. Potter, data or evidence?
Okay, sure. Thank you. If you can, just this property was purchased last year in March of 2022. It's closing disclosure should be in the evidence.
Let me check. The earliest evidence, or the most latest evidence packet we have is dated June, but we do show it in there.
Okay. Yeah, it's I'm trying to get back to the page now. The one I'm looking at, it was on page 16 of 23, but you might have something different. But anyways, it's showing 849,292. It's purchased from Darling Homes. That was March of 2022. Now, again, Madam Chair, I'm talking to you as a property, as a taxpayer, as a homeowner myself, and I'm sure that you are. If you were to purchase this property for $849,292 in March of 2022, and your property jumps up over $300,000, and you're expecting to pay a mortgage note on the 849, the taxes on the 849, and within that 1 year it jumps up over 33%. What do you do? What do you do? I mean, that is significant. That's ludicrous. And regardless if the district goes by that, you're not held by to those same parameters. You can do what you want to do based on your discretion. You don't have to go by that. That's why we're here this hearing. We're here to weigh this evidence and for you to make a decision, a determination on what you think is fair. Now, I understand that the market increased, and I'm going to go back to the sales and take a look at that. But that is too big of a pill to swallow. That's choke material. Like, you can't do that to someone. So I'm asking to be fair and do something that is going to benefit both sides, because it just can't be. It can't be that happens to someone the first year. It's not fair. It never used to be like that. And I worked at the district for 7 years since 2015, where any time that there was a purchase price in that given year, they went to it, builder sale or not, they went to it. But it's just because the market has been increasing the way that it has lately in the last 2 or 3 years, that there's been much more emphasis on the last quarter sales. It never used to be like that before. It would automatically go to that purchase price. And there's several other counties that would do the same. So I have to argue hard for this person, because if I was in their shoes, I would take this to arbitration if it didn't get close to that purchase price, because you have to fight that first year. You have to. Or you're going to be stuck with that note and those taxes for the rest of the time that you own that property. So I'm going to try to do something that I think is fair.
Okay.
Realizing, that there has been an increase in the market. And so let me take a look. This is hard to do, and I don't want you to just go with if your opinion happens to be lower, go with that. You don't have to just go just because I say.
If it happens to be lower, like
this
that.
This is a unique case, and there's a lot of things to consider here. I'm going to be at $950,000, and that's increasing. That's increasing $100,000 from when they purchased it in 22.
Yes, sir.
I'm at $950,000, and I have no contest on equity. Obviously, the sales data is way more relevant, and that's all I have. Thank you for your consideration.
Thank you, Mr. Garner. Any comments?
I think that the atypical market that we've seen the last couple of years is why the district has really tried to focus in on those last quarter year sales, because we are tasked by the tax code to appraise homes at 100% of market value as of January 1st. In past years in which that market hasn't really deviated much throughout the year, then it's easy to go to a sale price, even if it's earlier in the year. I think the 4 sales that I presented that are all just 3 of the 4 over 1,000 square feet smaller than the subject property, comp 1 being the closest in size, all selling in the last quarter of 23. Comp 4, a resale in January 23 at 4035 square feet, almost a full 1,000 square feet smaller, sold for $900,000. I think it stands to reason that the subject property at 5010 square feet in the neighborhood as of January 1st of 23 could have sold for $1,154,456. All of these, I think these sales drastically support that value, even though they paid so much lower for it in March. I think they got a heck of a deal. I'm still at notice, nothing further.
Okay, thank you. I can give consideration to that for comp 4 that you've provided at 1,020. Sales price of the house in March, I know, was at a lower time frame. It was obviously contracted in 21. And this situation with the house, probably being one of the largest ones in the neighborhood, certainly has some consideration because those are looked at a little differently. I move to recommend a market value of $950,000, and because equity will match market, I move to recommend an equity value to match market of $950,000. This hearing is closed.
All right.
Yes.
There we go.
That's awesome. But it just shows how passionate you are and how you go to bat for folks, because I mean, some people get really nervous when it comes to going, going to like, probate, not probate, protest, Jesus, protest your property taxes. And I have a couple people who are asking, oh, okay, they just changed it. I have a couple people asking how they can get a hold of you. What's your information? So do you mind sharing, your Ownwell and then your information that they can see and they'll have time
Yes.
to.
Okay. Can I just put it in the chat? Is that okay?
Yeah, put it in the chat. And then I also wanted just to circle back around to that new construction, because I know one of my clients who are on, she bought last year in January. And I know for a fact she was, thank you. Oh, can you put your number or a good email too? Okay, awesome. And I know she's going to ask, okay, you touch base on the dirt versus the improvements, but can it go up? Can it do the 10%? Like, so my client that it was 138 and now it's 500, is that cap still
Okay. Yeah.
included?
Yeah. You can't go off the 10% from what it was before, because her homestead wasn't applied at the time. Your homestead, it will kick in the next year whenever it's at 100% of market value. They're not going to put the homestead on the land, or a partial complete home. Once it's fully complete at 100% of market value, that's when the 10% cap will start from that point going forward.
Okay, so whatever,
help?
yeah, it does. So anyone who's on here who's buying new construction, the reason why I say save $200 to $500 a month is because of this. The first year it's on the dirt, the second year you can't do the 10% off of dirt versus a complete home.
Right.
So year one is where your starting point is. And as long as it's not higher than what you actually purchased for, that's the only thing that you could fight for. But if it's lower than what you purchased for, you're on the right start.
Yeah, that's a good point. That's a great point. So, like, let's say that you purchased it for 500,000, and let's say that the district has it at 100% for 2025, but they only have it valued at 450,000. Well, then you're getting a deal, because then you could put your homestead on that 450,000. You can do that, because you're not going to want to protest it. There's no point of protesting it if you bought it at 500,000 and they only have you at 450.
It only matters is if it's the other way
around.
Yeah.
If you bought it for 400,000 and they have you at 450, then you protest, then it will go to the 400, then your homestead will start from that 400,000, and it can only go up a maximum of 10%, which the following year it could go up to 440,000.
Bingo. Right? That's what I wanted you to say, because that is the nugget, guys. And a lot of people that I do I do business with, they're either buying new construction right now because they're given the best incentives and things to that extent. But after the dirt appraise, the next year, that's where your starting point is. And you only appraise if it is higher than what you purchased for. Now, if it's lower, you stick with it and you just keep running and making sure that it's not appraising more than 10%. Don't be a part of the people who, miss it in the mail because you don't check your mail but twice a quarter.
Like me. And also another thing, on any of the hearings, when you go to a hearing, the hearing always starts at the market value, okay? And you work down from that number. So if your market value is at 500,000, but that taxable value is at 450,000, your hearing is going to start at the 500,000 and then try to work down from there. and you would have to get all the way below 450,000 to even save $1 in taxes. Does that make sense?
Say that one more time, because I don't know if I'm
So,
following. One more
okay,
time.
you know how you have a taxable value, because let's say in the same example that we had, let's say I buy my home for 400,000,
Mm-hmm.
and then the next year it can only go up a maximum of 10%. Taxable value can only increase a maximum of 10%. Okay, so the next year it can only go up a maximum of 10% taxable value, which would be 440,000. But if the homes are selling for 500,000, then the market value could be at 500,000, but my taxable value is capped at $440,000. Okay?
So I'm looking
So,
at what she sent me. So I'm going to make
yeah,
sure
no,
I
you're
can
fine.
explain this to her. Okay.
Yeah, so when you go to the hearing, you're starting off at the 500,000, trying to work down below your
The
taxable
450.
value.
The
Yes,
taxable value.
that's correct.
Okay. Good stuff. Guys, before we let him go, do y'all have any last questions? First off, thanks for staying the whole time and showing up today, investing in yourself, because the name of their company is Ownwell. So we want you to
Yes.
actually buy a home and then own it well, please. We want you to
Yes.
hold on to it. So this is a perfect time to ask a retired appraiser now.
Property tax consultant.
Thank you. Yes. Do y'all have any last questions? I'm going to give it like 30 seconds. And if not, then we'll jump off. And I just appreciate you, Sky, for taking the time
For sure.
and pouring into people. You have his information. Also, this is on YouTube. I will put all his information in the description as well, so that you're able to contact him even after this call.
For sure.
All right,
Yep.
let's see. Going once, going twice. Sold. We're done. No questions.
All right,
Any
Kira,
last?
well, thank you too. Thank you so much for giving me the opportunity to do this. I really appreciate it. It's been nice, working with you, and I'm open to the opportunity anytime. So if you want to do this in the future, it doesn't have to be next year. If you want to do something kind of mid-season and give people some more pointers, I'm open to doing that as well. And thank you everybody that tuned in and stayed and asked questions and were participating. And thank you so much.
Absolutely. Sorry, we did just get a question. It says,
Okay.
for any reason, is it possible to negotiate to 410 to 420 with the last example you made? So like,
So
I'm guessing if it's at 420 and they want to go down to 410.
yeah, it's always, you can always kind of consider an informal and even a formal kind of like a negotiation. But with that negotiation, you have to have evidence to support your argument, right?
Proof.
You have to have evidence, which is either pictures, quotes, your closing disclosure, a fee appraisal, something. You have to have
Yeah.
something to support that. You can't just go in there and say, well, you think we can maybe do like a little bit less? Well, you could try it. It doesn't hurt to try it, but they're going to be like, well, the evidence doesn't really show that I can go lower. But I mean, yeah, you can just ask for it. You can just say, well, I really feel like, based on the evidence, you could do something like this. I really feel like based on the evidence that I've presented and what I've seen, that it should actually be a little bit lower. Because at the end of the day, an appraisal is simply an opinion of value. That's actually what it is. It's
An
just an
opinion,
opinion of
guys.
value.
Yes.
It's not
Yeah.
a fact.
Correct.
That's why
Yeah.
they don't always get it right. Like I said, there's a third that's going to be too low, a third that's going to be too high, and about a third that's going to be spot on. So yes, you can ask, but it's always going to be better if you have supporting evidence.
Yes. Awesome, Sky. Well, thank you so much. We won't take up any more of your time.
You're
And they
good.
have your information and they'll reach out. So thank you. And
Okay.
yes, for sure next year. But if I feel like I'm getting a lot of
Yes.
messages from clients, we'll do another.
Let's do it. Let's do it. Let's run it back.
Okay.
All right. Have a good night.
Thank you.
Take
You
care.
too.
Bye.
Bye, guys.